Hello and welcome to the Templum Digital Assets Report. I'm blockchain global news anchor Patricia Wu, along with my co-host, co-founder of Templum, Vincent Molinari. We're here at the New York Stock Exchange, and it is a busy week, as always, in this fast-moving space.
It certainly is, and we're very excited about today's show, Patricia.
Well, let's get started with the headlines from DC, and once again, the SEC is making headlines in the cryptocurrency space.
Absolutely, and I think the conversation is going to be elevated now with Commissioner Peirce's comments this week, and we're going to talk more about that. Very important week.
All right, well, great segue for me. Speaking of SEC Commissioner Hester Peirce said that she believes her agency's interpretation of the so-called Howey Test, which regulates cryptocurrencies, may be too broad. In a recent speech, she said, quote, "While the application of the Howey Test seems generally to make sense in this space, we need to tread carefully. Token offerings do not always map perfectly onto traditional securities offerings." Peirce also said she is concerned the SEC is being too tough in denying companies permission to launch exchange-traded products based on Bitcoin or other cryptocurrencies. We rightfully fault investors for jumping blindly at anything labeled crypto, but at times we seem to be equally impulsive in running away from anything labeled crypto. We owe it to the investors to be careful, but we also owe it to them not to define their investment universe with our preferences. The Howey Test was established over 70 years ago from a 1946 Supreme Court case involving Florida citrus groves. It's still used to determine what constitutes a security contract, including the Wild West of cryptocurrency. Well, Vince, this sounds like the SEC is really trying to understand this space, which is good news for everyone.
Well, no question. The Commission has been very thoughtful and engaging around this embracing of technological innovation and what it means. I think this is going to be viewed as a watershed kind of moment within the Commission, as you have a sitting Commissioner and Commissioner Peirce coming out very proactively and defining that she believes that our view of regulating cryptocurrencies is too broad. Well, that ties back to her dissent earlier in the summer when she dissented on the Winklevoss ETF. So we're seeing a pattern within the Commission, and certainly with Commissioner Peirce, that thinks that we should have some expanded view and maybe some less regulatory frameworks on it. I think that's going to begin to change the narrative, and I think what we're seeing now, particularly as she references Congressman Soto and Davidson's bill, the Token Taxonomy Act, which calls for preempting security law for utility tokens. Are we moving to a stage in the narrative that it's not all securities? Is it and both a utility token and a security? So it's going to be really interesting to see the way this plays out in coming weeks.
And what do you think personally? Is it too broad?
Well, you know, I think we have to be incumbent on investor protection and being careful and thoughtful as we move into new territory. So we certainly want to embrace capital formation. We want to embrace access to capital and access to secondary liquidity. Where I do get concerned, and I think Commissioner Peirce and all the other commissioners agree with this, is making sure investors are protected as we engage in new products and to ensure that those products are being conducted within compliance of regulatory frameworks, and that may be other than the SEC. How do you balance that with giving opportunity to investors to invest in new and innovative products? So
this will be interesting to watch.
Absolutely.
Joining us today at the NYSE is an expert in the blockchain space. Mark Smith is CEO and co-founder of Symbiont, a market-leading platform for institutional applications of blockchain technology. So it is so good to have you here today. And you guys also have some big news to announce between Symbiont and Templum. So tell us about it.
Really thrilled today and to have the backdrop of the New York Stock Exchange here today to do this. That we've entered into a partnership agreement with Symbiont for Templum to adopt the Symbiont platform and protocols. We've gone through massive amounts of due diligence and research in the process. And aside from the long history of Mark as a founder of Symbiont, going back to the early days of evolution of finance, what they've done around blockchain really speaks volumes. So we are thrilled to launch this partnership. So congratulations.
Well, thanks, Vince, and thanks for having me. I'm very excited to be here, and I couldn't be more proud of the partnership we've struck. I think more importantly than blockchain technology, which really generally takes up all the discussion, it's the philosophical understanding between our two organizations of how to properly apply the technology in an enterprise financial environment. I think that's what speaks volume to what Templum has been able to achieve so far and what we can do together as partners.
And I couldn't agree with that more, Mark, and I think it's really from our organizations, a recognition that this is an evolution of finance, similar to ways that we've seen other technological advances impact capital markets,
Absolutely.
trading. So I think we agree it truly is an evolution. I think really wonderful for the audience to understand a bit more about Symbiont. You've been one of the early pioneers here, the multi-year journey that you all have been on. So I'd love you to share some of that foundation with us.
Sure, things have changed a lot in 6 years when we founded the company. So I founded the company in 2013, early, really out of the financial crisis. You know, this is my 6th startup, so I'm a little bit of a serial entrepreneur. All have been in disruptive fintech. The last one was a bank, and I founded a community bank and opened the doors in November of 2007. So don't ask me for market timing, Vince, because I can't do that. I'll never make it on the floor. But what we did realize is that the world was changing very rapidly due to the financial crisis, and that regulators were stepping in to try to really engineer markets away from risk. And we both know that's not possible. And it was my immediate belief that the doubling down on centralization and the overreach of regulators really could have been avoided by engaging technology in the next phase of market evolution. And so I went to try to find a technology that could really serve these purposes. And what was I looking for? Decentralization, bringing markets back to Adam Smith's recognition of a peer-to-peer marketplace where people can transact freely with one another. And I missed Bitcoin, frankly. I read about it in 2010, rejected it as hobbyists, and then came back to it in 2012 and then really said, blockchain technology as a storage layer and smart contracts as smart securities can solve big problems in existing capital markets. So we started Symbiont specifically to do that.
What's really interesting more and more to me is how you balance that level of decentralization with regulatory frameworks, and in fact, how involved you all were in the changes in the state of Delaware.
Sure.
So, if you can share some of that with us.
Yeah, so in my career, 25 plus years, I've been regulated by the alphabet super regulators, just like you, my friend. And we entered into this saying, in order for this to become ubiquitous infrastructure, we have to engage with the regulators so they can understand the technology. And more so, when we find places where the regulation isn't clear, or places where we think it needs to be changed, rather than working around it like many have, and we see in this industry, we attacked it head on and said, let's change those rules and those regulations to make everyone understand clearly that they can use this technology in compliant fashion. So we spent 2.5 years in Delaware working with former Governor Merkel, who's now on our board of directors, I can proudly say.
Congratulations.
And working with the Bar Association and the Division of Corporations in Delaware. And we made, for the first time ever, a blockchain law that said that using blockchain technology as the sole custodian of these new instruments is completely compliant, and that there's a new class of ownership, and this is really exciting for Templum, called distributed ledger share ownership, in which you can originate and own a property right structure of a security through finality in that and be compliant. And that was pretty powerful. So we achieved our goals from a regulatory standpoint, a law standpoint, and now we're focused on the private sector. And this partnership is going to be the first one really to take advantage of the groundwork we laid from a regulatory perspective.
Well, thanks. You couldn't tee that one up better for me. So I think when we took the approach from Templum of really looking at how do we create a regulatory environment for the capital formation, the distribution of securities, and their secondary trading in our ATS that are in the digital format. So achieving those regulatory approvals, now being able to marry that to the concepts of Symbiont, I think is really what we hope becomes a standardization and best practice for others to follow. I think we both share the same view, and I'd love to have you share it with our audience, a view of public chain versus private chain around security transactions.
Yeah, we've been very focused on that. People at the very beginning asked us, why aren't you using Ethereum in a permissionless environment, a public chain? And right off the bat, we knew that from a compliance perspective, that miners, who we're all familiar with probably on this show, who really create settlement finality, and that's an important concept in traditional financial markets. Those miners are responsible for taking those transactions and putting them in a block, and they get paid for it. And if you don't know who the miner is, you're violating a myriad of rules and regulations by paying someone to create settlement finality who you don't know, who hasn't been gone through AML or KYC, and certainly you can't know your counterparty in that example. So we from the very beginning, we said, those are interesting for hobbyists. They're very interesting general purpose technologies, but if you want to be compliant, you have to build an enterprise-based blockchain and smart contract solution that doesn't include mining, that doesn't include crypto economics, that can really get at the heart of these problems and have it be compliant. And so that's what we did from day one. From the ground up, we built in privacy and confidentiality, which doesn't exist in the public world, and you have to have in ours. And we also built ways in which regulators can participate in the network, looking for patterns or looking for other things. And we also set it up so a broker-dealer who's heavily regulated with a very regulated trading environment can integrate and have a completely compliant straight-through process. So we're really excited about the application here because Templum is going to be the first that others will follow.
And thank you. And I think, at least from a Templum lens, and I would love to know your view on this, it speaks to institutional level engagement as well, right? When you move from that peer-to-peer network, I think the acid test, the compliance requirements, I'd say the knowledge of regulatory requirements are much more stringent at an institutional level. So you clearly comply with all of that.
Absolutely. You have to have enterprise grade for the institutions to come in so they can trust your systems, and certainly we know we have that in spades on both sides of the equation. But you also have to have a deep understanding of how the investor participates in that process. And I've heard you talk about it before around the environment that you create so that the SEC, whose mandate it is for its consumer protection, can feel as though that through the use of broker-dealers and ATSs in this technology that you are protecting the investor and giving them the best possible infrastructure environment to do their transactions in and solving a lot of problems. Most people don't think about this as regulatory technology, but it truly is. A smart security self-regulates. And I can't imagine the SEC or anyone else being more excited about the opportunity for investors to have a security that self-regulates so that they can open up more opportunities to the investors themselves.
Well, clearly we can talk all day on this. I think on that note, it's a great point to call it a day and look forward to another interview in the future.
Fantastic. Congratulations on the partnership, my friend. We're excited to go forward.
Thank you.
Well, it is time now to check the Templum inbox. Questions and comments from the many industry observers and experts that watch this program. Our first question is one you get asked all the time from traditional investors. In the end, what is the benefit of smart security and why blockchain? Of course, we're going to go to Vince, our resident expert on that.
Love this question, and you're right, we get it quite a bit, and it's one in the industry that I think is really important to be understood. You know, when we look at a smart contract, when we look at a smart security, as I think we'd like to say, it has certain characteristics that are really important, particularly around an unregistered security, and how do you create efficiency, better cost structure, eliminate some of the middle infrastructure costs in that transaction? How do we bring data and information to the forefront so that we have parity, continuity of information across all investors? We don't have that in the private unregistered marketplace today. So when you embed that into a smart security, I'll call it the ultimate structured product vehicle. So you're changing the construction, the access, and the pathway to a comprehensive secondary liquidity that is best served utilizing a smart security. So we think it really brings great benefits without having, I'd say, many disadvantages, and certainly light years ahead of any lack of standardization or best practice that we have in the unregistered security marketplace today.
Well, if you have any questions for Vince and Templum, you can send him an email at questions@templuminc.com, and we can talk about it on the show. Well, that does it for this edition of the Templum Digital Assets Report. And if you want more information about Templum, you can always check out their social media pages.
Great, we'll see you back here next week.